It's Friday, December 8th. It's Jobs Friday. If you didn't know, Jobs Friday is the jobs report comes out. Unemployment down to 3.7%. Job growth rises. So you have more jobs in the system than were expected. Unemployment actually ticks down. Understand that that's not great for the markets. The bond rates went soaring, and I'll include both of these articles in the newsletter. The S&P, NASDAQ, Dow futures slip after latest November payrolls. Understand that what this means is with job growth growing, good news is still bad news because they're afraid that, this brings back into play the potential that the Fed is going to start raising rates. And remember, here's a chart that I posted yesterday in the newsletter. And I said the Bollinger Bands are coiling up. Where are we going? Kind of like peanut butter jelly time. Where you at? Where you at? Bollinger Bands are coiling up. MACD is still crossing down. RSI is ticking up. So we're quickly getting up on the overbought scale on the RSI. Meanwhile, you're just capitulating on the stock price of QQQ. So you want to be careful of this little, this little gap down here. But I don't think that we're in for, oh my God, we're going back to the 200-day at 371 from 390, which would be a significant loss from down here, 390 to 370. It's a 5% loss on the Qs. I don't think you're going down there. If we look at the weekly on a long term, you still have confirmation on this week. The 50-day is still moving positive. The 200-day is moving positive. And you can see the Bollinger Bands are just cinching up. And when Bollinger Bands cinch up, understand, that means you're in for a move, either up or down. Doesn't tell you, oh my God, we're going to soar. That's where you use your moving averages to try and take a look at where we're moving. We are overbought. The RSI is at 64. Look at the MACD. It's above the oscillator line. So likely we need a little cool off, but that doesn't mean you get out of the markets. Understand, you've got to be in the markets to make money. And that brings me to my second point. And the most important thing about this podcast is track your performance. You can see here, I've got 3 accounts. These are my Fidelity accounts. These are my large accounts. These are 7-figure accounts, all 3. So you can imagine the amount of money that is involved with this. But what I want to point out is it's December. Look at your year to date for every one of your accounts. If you're managing things correctly, you should be beating the S&P. The S&P is up 20% this year. You should be higher. My Roth is up 44% year to date. The Dow is up 19%. I am beating both the S&P and the Dow. I don't have QQQ in this look, but understand Qs are probably up close to 40%. So my Roth is, and I'll include these in the newsletter. If you want the newsletter, remember, it's down there, Linktree, linktr.ee/daily stock pick. When I go to the next screen, you will see the link down below. But the Roth is up 44%. If I look over my individual account, that one is up 37% year to date. So the individual, that's my brokerage. The other thing that I will point out is the asset allocation in my brokerage account. I am 9% short term. So I talk about the 40-40-20 portfolio. I am sitting with 9% short term. So 9% of my actual portfolio is either being traded or it's in stocks that are short term, under 1 year. So that's important to understand because I'm actively trading this account. I'm actively trading my Roth. The Roth, I have 6% in short term. So portions of this, I have, I've gone long term on some of these stocks because I started buying last year in December on some stocks. My rollover IRA, that is up 40%. That's the one closest to my head, 40%. Whereas the S&P is up 20 and the Dow Jones is up 19. My short term in my rollover IRA is 4%. So Understand this is a way to manage your portfolio. You've got to do this. If you are not beating the S&P, your strategy may need to be changed. Doesn't mean that you give up. It just means maybe you move more into a VOO. Maybe you move more into a QQQ or an ETF that is actually beating you, and you enhance your strategy. How do you enhance your strategy? Well, you get some tools. Part of the tools, it's TrendSpider. Part of the tools, Seeking Alpha. If I just go to my link tree and I show you, I've got tools for you to buy. And the first tool is TrendSpider. You get up to 25% off. It's under $400. Is it under $400? Let's just go and look at the pricing real quick. But that's the first link. And what you're going to do is you're going to go here. Yeah, it's $429 for the year. You need the Elite. You can't use Essential with my algorithms. You can buy Essential if you want, but Elite is the sweet spot because it allows you multiple workspaces, 100 results per scan, 100 live alerts. You get 30-day alert lifespan, 5,000 candles back test, scan all time frames, 6 trading bots. You get a lot with Elite. And that's the one that you want for $429. So that's the first tool. If you're not going to use charts and you just want to use charts sparingly, go and get a free chart software. Go and get Thinkorswim. Go and get Fidelity Active Trader Pro, depending on your brokerage. The screens that I showed you, those were Fidelity screens from the app. So if you have Fidelity, you get Active Trader Pro for free. If you have TD Ameritrade, you get Thinkorswim for free. If you have Webull, which is the third link down here, you get their desktop software for free. So feel free to use any chart that you want. TrendSpider is just a bells and whistle kind of thing. If you're not going to look at charts, look at Seeking Alpha, because this is where fundamental tools come into play, and you can track your portfolio in here. Seeking Alpha is an incredibly impressive tool, and there's a lot that I don't go into. I will do a video on Seeking Alpha. But understand, if you're tracking and you're not beating the S&P, if you're not beating the Dow, you've got to take your portfolio and understand you can put it into those ETFs until you get a strategy that suits you. That's the main thing you want to learn today, is understand where you're at within your portfolio. Amazon announced, and this is kind of crazy. I put out this tweet yesterday. You should probably follow me on Twitter. But I put out this tweet yesterday. PayPal. This is affecting our PayPal investments. And I am trading in PayPal. I have a pretty large position in PayPal, to be honest with you. I think it's 5 figures. But we've been going up. And we did get a little bump yesterday. In this one, we've lost confirmation. We should be up 14% in the 4-hour algorithm here. I still think you get to this damn gap here, up to 72. We've got to break that 200-day. But the thing about Amazon yesterday, they announced that they will no longer accept Venmo. No longer accepting Venmo as a payment option starting January 10th. 2024. That's not great. I don't know how much of the PayPal business that is, but I do know that's not great for the stock. The stock didn't move that much, to be honest with you. So maybe it was just priced into the stock. The better option would have been Square. If we just bought Square at the end of the month or the beginning of November, we're up 51% on Square. That's based on just the crypto move that's been going on. Square was the impressive one, but PayPal, I wanted to bring up that news story. I will include it in the newsletter. Yesterday, I also tweeted out from Shea Boulur. He's got a visual illustration of the top 15 growth stocks with the highest EVGP multiples, where the market sees a premium valuation. So you can see Tesla's in there, Shopify, Internet of Things, IoT, Snowflake, Net, NVIDIA Crowd. This is a great list. So if you're not following Shay on Twitter, on Savvy Trader, you should probably follow him. He puts out great information. If you want to just follow me because I retweet him all the time. Earnings yesterday. Let's take a look at some of these. I'm going to close these down a little bit. Let's take a look at some of these. The first one is AVGO, Broadcom. AVGO had a good earnings. I said, I think I posted on Twitter, you should buy the dip under 900. It was a solid earnings quarter. You can see we're not in as far as the algorithm goes. If you do extended hours on the algorithm, you probably shouldn't. But if I like to take a look at it on a 5-minute chart here, and if we just look, you can see you got it under 900 and you're at 929. So I believe that on the 5-minute chart, that, again, remember what I always say this. Any reaction in the market is an overreaction. Doesn't mean that you always want to buy this dip, but as we started to gain confirmation above 912 again, and you gain the 200-day on the 5-minute, probably made sense. If we just get rid of this extended hours and we go back to running, the algorithm doesn't have you in. It got you out with a 7% gain here. The algorithm will probably get you in the next couple of days. You're trading right now up 0.84% at $930. You closed yesterday at $920. It's clear from a long-term perspective. This is a quality stock with good earnings, and it'll continue to go up. I mean, if we look at AVGO here on FinViz, you can see you're 7% below your 52-week high, which was $9.99. It's going to take a while and it's going to hit the resistance at that 1,000 mark again. Your PE is 28. Your average target price is $1,017. That would be a solid move from $920 from here. So it's a great company. You can kind of see that, let's see, a buy from a director, $858,000 at $858. A buy from a different director for $9 million. There's been others that have been selling at $7 million. The big one here was March. Nobody's really sold recently. So listen, insiders know they probably have more to grow. Again, they'll probably sell when it hits that 52-week high of 1,000 again. But AVGO, solid stock. That may go into the core portfolio. It really is a solid stock. Lululemon, same kind of thing. If we go and we look at the 5-minute chart and you're trading on the 5-minute with earnings, you could have made some money here. And you kind of dip down to $438. You're at $454. It's starting to open up now. You're going to open up around $453. It looks like below the 200-day on the 5-minute. If we just look at the algorithm and we run this now, the algorithm makes you 29% over 2 years. If you just bought and held, it's 10%. So this yellow line up here, we'll get to that. Look, you have confirmation. You're pulling back now to 453, so you're going to lose confirmation. But the first stop is probably if you continue down this 50-day. The 50-day is still moving positive. See, it bounced off there. That yellow line up there, if we go to that and we look at the weekly, that is the all-time high. So that's the all-time high that you hit November 2021. I think you're going back to it. I mean, Lulu is expensive. Understand Lulu is an expensive stock. The PE is 58. The forward PE is 32. The year to date, they're up 45%. The average target price is $476. You're trading at $455. So you're up there at 52-week highs. You can see reiterated Telsey Group. They moved their price target to $520. Reiterated Needham. These are both today. Buy. They moved their price target to $525. Solid earnings from this company. Solid. I was in a outlet mall yesterday and I shot Puma. I'm not rich enough to afford Lulu. Yeah, but I'm also not paying the price for Lulu. We can look at DocuSign. Solid earnings. The problem with this is the valuation. The valuation is crazy. You're down 3%, 45.2. One thing that I wanted to point out, I went to Docu, and I can include this, but I won't. But DocuSign earnings, this is what Seeking Alpha gives you. And I think it's free. I don't know. I mean, I don't know what's paid or free. But if you go to DocuSign and you look at this is their stuff in charts. And you can see DocuSign subscription revenue. Look at that gain every quarter. DocuSign in billings. Look at that gain in every quarter. It's a little jumpy. Now, non-GAAP margins, you're seeing 80% non-GAAP margins. They haven't lost their margins. The operating margin is continuing to grow. So DocuSign in a Seeking Alpha analyst have it as buy. Wall Street has it as a hold. I like this company. I like that, if you've bought a house or if you used any contracts, DocuSign is what you sign with. I like it. I like it a lot. I mean, it's one of those growth companies that I really like. I think that the value of it, you're seeing it break through its 200-day. Now, when it comes down, it's breaking back down below its 200-day. It'll get back up to that 200-day. The long-term chart on this, it's a broken stock, but it seems to kind of be capitulating down here and putting in that bottom. But understand, DocuSign is still expensive. The PE is 190. The forward PE is 16. So as long as they continue to grow, they should be fine. That stock should come back. It's down 14% year to date. You're down 31% from your 52-week high. Upgrade September 27th. We haven't seen the upgrades or the analysts come in on this one yet. And you can see the options exercise. They sold here at 42. Pretty big quantities at 12 million at 42. Trading at 44 right now. I'd expect it to come back down to that price. If you're looking at just the 4-hour, I think you're coming back down to the 200-day, which is 45. You might come down to this 50-day, but the 50-day is still moving up. So even though you have this pullback, you probably have a golden cross in your future. So DocuSign is one that I would look at. One that solid here, Roblox. Top gaming play, attractive valuation, strong free cash flow. This is an article from Seeking Alpha. RBLX is the symbol. This is in our core portfolio. It's up above 40 again. It's at 41.72. This one just continues to rise. You can see in the algorithm here, you were in September 26th at 27. If you go up here, 54%. Don't want to give you any misrepresentations. The algorithm loses you 55%. If you bought and held this one, you lost 66%. This is a crazy, crazy volatile stock. So understand, I like this one under 40 and then sell it over 40. But wait until you have confirmation before you buy. There's no way you could have told that this one is flying that way. It's probably a good buy and hold for a long term, but it's a solid one that you can look at. 4 stocks to watch today. This is on Friday. Carrier, Honeywell, First Solar. So DocuSign, they talk about the Broadcom earnings. They talk about DocuSign earnings. Carrier Global rose more than 5% ahead of the market open after the conglomerate Honeywell said it would buy Carrier's solutions business. First Solar added 4% in pre-market after Morgan Stanley upgraded the stock to overweight and increased its price target 64%. So FSLR, this is a one of those solar stocks that has been beaten down a little bit. Not crazily beaten down, but beaten down nonetheless. 149. I think it's been beaten down less than. It's been beaten down far less than what. The SEDG, SEDG has been beaten down. But 208 is where, 210 is where you were trading. You're just taking a little break here. But First Solar is up 3.64%. If we go over and we look at that upgrade here in FinViz, if you can't read the article, today upgrade Morgan Stanley, $237 price target. $237 price target. It is trading right now at $150. So great gain if you get up there. The average price target, let's see, the average price target is $234 and you're trading at $150. So, and it's not, again, this is from October. Most of these are over $200. So if you want the volatility, if you think higher for longer is over, solar stocks may be the way to go, and First Solar might be a top pick for you. Social requests. Moody from Spotify wants me to go over Exxon. Boy, what a horrible quarter Energy is having. Exxon here at 99. You have no confirmation. There is no reason to actually buy other than, hey, I want a long-term energy stock. And Exxon and Chevron are kind of the pinnacle of those energies. Just understand you are still very high historically. So I sold a little bit back here at 109. Probably should have sold more considering that we were at close to 52-week highs here. They announced that they were buying PXD. This was January 2023. This was last year's tax loss harvesting. I was taking gains because I bought way back here in the 40s, 30s, and 40s. So I was just taking some gains, sold it here. Probably will sell a little bit over 100. I do think that here's what you have to know about Exxon. It's going to trade with the price of oil. And so the price of oil, if you want to know the price of oil, you can go to FinViz, just scroll to the bottom, crude oil down here. It's up 1.93%. Exxon is up 0.88%. And when we go look at Exxon, the PE is 9, the forward PE is 10. You get a nice 3.76% dividend every year. It's down 10% year to date. Your 52-week range, you are close to the 52-week bottom, 98.02. So I don't want to say, hey, it's absolutely a buy because it's near the 52-week bottom. Because look at that weekly. Weekly, you're kind of just putting in your bottom on the downside, but you have no confirmation. So if you don't own this, do not buy it. Do not buy it thinking, oh my God, I'm going to make so much money because it's going to go back to 120. It is based on the price of oil. The RSI right now is at 39. It's the same thing as Chevron. It's just if you don't have access to energy, you may want to think about XLE, which is the energy sector. We can look at this one. See, you don't have confirmation. The algorithm doesn't have you in there. If you look at a weekly of the XLE, you're well above that 200-day. And you don't trade many times over that 200-day. If we go to a quarterly of this, let's just go, this is XLE. Let's go to a monthly. We'll go to a monthly because you have the 200-day there. Look, you just don't trade for a large amount of time. This goes back to 2003, 2002. That was a great time for energy. This is XLE. Great time for energy. By 2006, you hit the highs. If you bought in 2006, you're sitting at the same price you were at XLE today. That's what? 20 years ago, almost 20 years ago. If we look at Exxon in the same kind of thing, and you look at a monthly, if we just go to a monthly here, you can see, you may have bought in 2014 at $100. Well, what? 20 years later, you're sitting at the same price. So I don't want to say that you should absolutely buy it under 100. Just understand, under 100 in my world means you get a nice 3% dividend, and I think you go to 120 if the price of oil starts to pop. But the price of oil is tough to predict. George sells on Spotify. Hi, Gary. I know unprofitable biotech isn't for you, but KRON run by living legend, former CSO of Gilead, investor Tamiflu, in November bought $1.47 million on open market, owns 18% of it overall. Let's look at KRON. He's right. Nothing about non-profitable biotech gives me, oh my God, I'm going to invest in it. I know nothing about biotech. This chart, 80 cents right there, solid gain. I mean, the algorithm right here would have made you 54% if you just bought it November 15th. So solid gain, but that 200 days moving negative. The 50-day is started to move positive. I mean, look at that 50-day. It started to move positive. You may have a golden cross coming here. You may go up. If we look at a long term of this one, that may be why it's starting to go up, is because of that buy. Look at that 50-day. Still hasn't moved positive. You don't have a 200-day. If we go over to FinViz and we look at KRON, you can see they're losing $119 million. They have $3.20 of cash on hand. Let's see. What's 3 times 56 million?
The answer is 168 million.
So they have a year before they pretty much have to dilute. I mean, that's what worries me a little bit. You look at the average target price, take it with a grain of salt, it's $8, but the most recent one was in September of 2022. When you look at these, the president and CEO, yes, he bought a ton of it at $80, at $1, at $1.08. You're trading at $127. If I look at the volume, let's just run this and we look at the volume. You can see the spikes in volume here, and then here. When this news came out that he bought it, huge spike in volume. And you're seeing the trade-off in volume right now. I think for me, if I were trading this, I'd want to get this when it pulls back under $1. And I think it will pull back under $1. But again, it's biotech. Man, there could be news on this one, and all of a sudden, it's at like $4. Salpi Mientag wants me to look at NAT. This is a tanker. I think last year, the year before, was the year of the tankers and the shippers. This is Nordic American Tankers Unlimited. Right now, after their earnings, they must have had bad earnings. 13 cents. Yeah. You went from making 13 cents to making 4 cents. This one is just a dying. I mean, you're going to have a death cross. That 50 days moving negative. The 200 days still moving positive. You don't have any confirmation on a 4-hour whatsoever. If we go and look at NAT over here, they're making $117 million versus the biotech, which was losing money. You're up 28% year to date. The average target price is $5.37. You're trading at $3.09, $3.90. Upgrade, but that price target means nothing. I mean, look, it hasn't been covered since September 2022. They have a short interest of only 2.8%. They have 208 million shares outstanding. I mean, it's, you're going to have problems connecting, your brokerage, probably selling and buying this. There's no insider transactions. I'd stay away from shippers. In my mind, I just think, you can trade this one on like a 5-minute chart and make some money. But from a long-term standpoint, I wouldn't invest in this company. The algorithm makes you 85% over 2 years. The buying and holding makes you 91% over 2 years on this one. Because if you look at the weekly, you've been going up. I mean, I just think it's a bit for a shipper. I think it's expensive. But if you want to hold it and you know something about shipping that maybe I don't, then maybe you're doing well. But look at the long term of that one. Doesn't give me a whole lot of confidence that this isn't just more of a bounce up to $5. So trade it. I just don't think that shippers have any kind of big thing. Now, Bullish Bites on Instagram, you guys know, I'll link them in the newsletter. They want me to go over CCL. This has been just a monster stock. Right here, $11.32. It got you in at the end of October. If you got in with the algorithm, I mean, that's 55%. You're about to have a golden cross on this one, the 50-day. Crossing up on the 200-day. If you look at the weekly on this one, we are just at the 200-day, and you're probably going to use that 200-day as some form of resistance right here at about 16, 17. So you're up 0.39% today. I see their earnings coming up December 18th, which is in a couple of weeks. So let's see what Seeking Alpha has to say. Let's see. Buy, strong buy. Yeah, I mean, right now the valuation is the only thing that's negative on it. Profitability, they're not making money. They took out so much debt. Cruise operator Carnival on track to hit 9-day winning streak. That's not something you typically want to buy into. You do have confirmation. Again, their earnings are coming up. They have to be 86 cents. About to have the golden cross. I can't argue that it's about to have the golden cross and you're coming into earnings and you're just hitting the 200-day and maybe you get over that. But look at the long-term history of this one. You don't trade many times since 2018 over that 200-day. You just don't. I mean, ever since it clipped the 200-day on December 2018, it hasn't gotten back there. So is this the bounce that gets up there? I don't know. In my mind, I think this top that we hit in July 2023 might be the top at about $20. So I think you might be hitting that top. Let's look at what the analysts are saying. Average target price is $17, which is right where you're trading right now. Resume coverage, Citigroup buy. Their price target is 18. That was just November. October, William Blair, no price target. September, Truist, sell to hold, but they upped it to 17. There's nobody really saying, hey, it's worth a lot more money. But if you want to gamble on it, I in my mind, I think this is a trade. I don't think this is oh my God, I'm going to buy this and hold on to it because they're making money. This is a company that's actually losing $1.6 billion. They have plenty of cash on hand. There's no problem with cash. I don't think that they're going to have to dilute you, but they're losing money. They took out so much money. And if we look at insiders, October, director bought $1 million. Same director back on October, same thing. He bought about $6 million worth, almost $6 million worth at $11 and $12. And you're trading at 17. So in my mind, I think there's better places to put your money. But again, that's coming from a tech investor. Let's talk about scans. In the core portfolio, Qualcomm got a scan, a cross up. If you're in Qualcomm and you got in at 108 right before their earnings, which I said, hey, this is a solid company and it's a $120 stock. You're at 133. That's a 23% gain. This one gets another cross up on the MACD, which means it's a solid, maybe a secondary move. The problem is the RSI is at 70. You have confirmation. I don't know that I'd necessarily get into this one right now, but Qualcomm, solid company to buy and hold. Google, Gemini was released yesterday. We went over all of that. Google had a 5% gain yesterday. It's pulling back right now at 136. It's down 1.55%, but it got the cross up at 138. Anything under 130 is a buy on this. Anything under that 200-day, which is about 133, buy it. Just buy it and hold it. It's one of the cheapest grade 8 stocks as far as valuation goes. So I think you could buy that one. Apple has another move up with another cross up. This is what I told you, I'm looking to trim this. The MACD may be crossing up a dent. It did. The RSI is at 62. It hasn't come down. We still have confirmation. You have gaps below it. Apple at 194. I'm not putting more money into it, but I'm also not selling it. So, from a valuation standpoint, I think this one could be a decent valuation. These guys are buying so much stock back and they retire it that the price just keeps moving up. You can see it. It's just a constant mover up. This is over 50% of my portfolio. So AMD had a cross up. This had a big move yesterday. This has a buy at 128, it looks like. But if you bought on the last one, it's funny because it got you out with a 19% gain. I don't know that I necessarily would have gotten out. I might have because it did lose confirmation, but you're up 29% off of that one. The algorithm loses you 23% on this. Buying and holding loses you 9%. I do think this is part of the AI train. So from a long-term perspective, I would just buy and hold this one. Am I buying it here? Probably not. I mean, I probably like it a little lower, closer to 120 at this point. I've got a bunch of this, I think at about 80, and I think at 109 and 119. I've bought a bunch of this. AMD. Boyle has a cross up. I've said this before. Be careful with this triple levered ETF. The algorithm loses you 79%, but if you bought and held 2 years ago, you lose 94%. So the algorithm actually protects you. $30.19 is the cross up. You do not have confirmation. I would be very careful of this because the inverse of this, KOLD, has just been on a solid move. I mean, look at KOLD. It still has confirmation here. There's no reason to buy Boyle. Even though it has an entry on the algorithm, this is 89% KOLD. If we go over here to FinViz and we just go home, here's how you look at natural gas, okay? Go down to here and just look at natural gas. I mean, this is a daily chart and it's just got nowhere to go but down. You're not seeing anything that's indicating to me that it's going to turn. And remember, oil is a decaying asset. It's a triple levered ETF on the futures of nat gas. Another energy name that cross up is Albemarle. This one kind of has a cross up here. It's up 4%. There's probably some news on it at 124. This one, from a long-term perspective, I think you trade this one. But from a long-term perspective, it's just been beaten down. So it's again, you could play the bounce, do a little bit more research into it, but Albemarle got a cross up. SMDD and SRTY are true levered ETFs that got cross up. One interesting one that I want to bring up, and there's a couple others that I will put in the newsletter, but BABA got a cross up here at 72.31. Do you want to buy at 72.31? I think it's getting to that point where it becomes interesting to try and time this bottom. Because if you look at the long term of this, China's in trouble. I've said this yellow line here at 100. I said anything under 100 you could buy and then sell when it gets over 100. It's provided resistance here in July, but you have no real confirmation. And even on the 4-hour, you don't have confirmation. I'd rather see you buy this when it pops to 75 than to buy it here at $72 and see it back down to 68. So again, I think this one has its time because it's just too good of a company. It's run too well in China. China's facing a housing problem. So understand that's the issue that you're seeing in this. So there's a couple other ones that I'll put in the newsletter. Again, we went over this. Anything that you want to see, the link tree, linktr.ee. All of the socials are up here. Should be following me because I do use all the different socials. Facebook, this is the link to the private group. We have X, which is Twitter, Voss, Vase, whatever you want to say. Instagram, YouTube, Twitch, Spotify, Apple Podcast. That's a link to Venmo me. I do like Venmo, which is why I chose PayPal over Square. I do have a Square position as well, but I didn't buy it that low. TrendSpider, if you're signing up, all you got to do is use this link, sign up, and then email me. The email is right here. Email me, and I'll send you back a welcome letter. Seeking Alpha, you get $50 off. I think it's the best platform. This saves me so much time doing research, and that's what you're buying. I think it's $189 for the year. But again, it saves you time. That's the key, is that I'm buying back my time. And for $189 to get that amount of research in one area where I can just point and click and look, it's even for a day trader. If you go over to Seeking Alpha, that's a $50 coupon, and you just go to the news. I mean, those 4 stocks that you're trading, Job Growth rises more, Riot Platforms upgraded CleanSpark. I mean, it just gives you news so you can take a look at some of these. God, let's look at Mara and Riot. But yeah, I could sit there all day and take a look. Mara is up 4% at 16. Riot, which is another crypto miner, is up 5% at 15. I mean, this is about to get the golden cross. Don't think that these things are done running either, because with Bitcoin continuing to go up, you're just getting to the 200-day on Riot. I mean, Mara is my favorite of the bunch because I do think that they have a competitive advantage. I've read about it. I think they have a bit more of a competitive advantage. But like I said, here, you're still going to get to its high, still 421% to go. So trade these tools, trade them. Understand that you can trade them. But you've got Webull. I think you're crazy if you don't have a Webull account. I'll do a Webull check just real quick of my balance. I put $1,000 in there at the end of the year last year. Right now, I am at $3,105. My largest holding is Apple. My second largest holding is Caterpillar. My third largest holding is Snap. My next largest holding is Boeing. Spotify, I have a little bit of. I think it's about $400 worth. That one has been just a crazy, crazy mover. But Apple, I'm up 35% in Apple. So, but I think you're crazy if you don't do it. I do this rather than sports betting. The app is so good and it's so much fun. I talked about the newsletter. You can subscribe to the newsletter right there. It's dailystockpick.substack.com if you want to go directly. The weekday, it's all free. So it's all free. If you've made it this far and you're not subscribed to the newsletter, you're freaking crazy, because all the charts are in here. Like this one yesterday, I provided some great charts. I even color coded them for people. And it has the links, but here you can look SPG. I color coded so you can see the blue line that goes to the 50 day. The green line goes to the 9 day. You can see here, green, blue. I color coded these things for you. So anything that you want is in the newsletter. The weekend newsletter is paid. I have a tools one coming out this weekend that I think I'm going to write about. Visible, if you're paying anything more than $25 a month for your phone coverage. This is great. This is the Verizon network. It's the same thing. You just pay $35 a month for basically the Verizon experience. $25 a month is what I have. It's delimited or descaled data. Deprioritized, I think is what they call it. I've never noticed. The only time I notice is when I'm at a stadium, but I just use the Wi-Fi. So I like this. It saves me a ton of money. Again, but if you're paying anything more, you should probably get that one. There's other links. The biggest one, it's giving time. You can gift me. If you make money, I got the PayPal app. I got the Venmo app. I got the Cash app. Either one. PayPal's the worst of the three. PayPal actually charges me fees. Venmo and Cash App don't. And Mint is going away. You guys know I have a fire podcast. I've said it for the past week, but Mint is going away. Empower is the one that I want. This will get you $20. I think you just get $20 into your account or something. I don't know how it works, but it gives you, they give me $20 and then they give you $20. So if you want, sign up for Empower. I actually like this. I really like this app. I will say I like Mint significantly more, but it's going away. So I have to like this one. It's free. It's free. So, but again, if you want anything else, hit me up on the socials. Okay, I'll talk to you guys later.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.